What's up? What's up? How we doing? Everyone good? So, couple of interesting moves that we've seen this morning. The long move coming out of Euro. Now, we had a nice expansive move from the setup we gave you guys yesterday in the live stream where we explained you could short from this area. And again, this is something I've said before. We don't recommend it, but when you see a move, you don't have to have your limit set. You can trade it on the next area that's created or the next area that's created, as long as you're not working down into those major targets. So we're not encouraging you to do that. I'm just saying if a move is true and it's going to work, probability is that you will be able to enter at multiple different points. Now, let me just adjust this quickly 1 second. There we go. So based off of what I was saying there, we have had a partial move down, and we've now had price come back up, right? Come back to the 4-hour time frame, and you can see the highs that we're taking out right now. So we're looking for price action to deliver a potential downside move here. For now, we're still keeping our wits about us. We got news in 2 hours, I believe. Yeah, 2 hours till we got red folder New York news. So with this move, we gave this out earlier, we're expecting a sell-off down towards this low. Now this is based off of the fact that we took out multiple highs within here, and then we've had a push down. We've then had multiple money in, money out sequences occur. So a sell down through those lows that we've built up here is what we're looking at. Now, as always, we could be completely wrong about this, but this is what our mechanical rule set will be telling us that is going to happen. So if it does, awesome. If it doesn't, it becomes part of the statistic that price action didn't play out on this given time. Remember, you always have to have the openness to understand that it's not about being correct, it's about applying a systematic understanding to price that consistently delivers over a long period of time a probability basis. So we turn on this, you can see our bias right here. This is technically incorrect here on gold at the moment because this fair value gap hasn't actually formed. So yeah, we're looking at this area here. This is based off of the bullish bias on gold. And we're running the lows here. Take them out to now push back higher again. Just wondering if this is active. What's active, my friend? Yeah, the stream's active. Yep. Yeah, it's active. We just don't spend a huge amount of time talking constantly because there's not always something to talk about. This is something I've said many times. So yeah, all good, all good. Yeah, we don't always have. I'm not always talking. So there's some low periods within it, but we feel like that's important because trading, sometimes there isn't stuff to talk about. Sometimes there's not stuff to do. We go live every day anyway because we like to show people that are looking at the markets the process that we're going through. So yeah, hope you're all good. And where are we here? Have to. We're looking at this high here. If we take out this high, we'll know because an alert will come. Afternoon, Void. How you doing, my friend? I'm doing great, thank you, my man. How are you doing? Hope you're well. You did make me laugh yesterday. That was pretty funny. Still looking at the same point here on Euro. So we do have on this feature here, or on this development version here, we do have the ability to add any function as an alert, and if it makes a inline bias gap, it will alert us. So we can turn it off, we don't need it on, but it will alert us, so it's pretty useful. Let me turn this back on because it's good for higher time frames. Let's see. Okay, we took the high. Let's see. We've run this high now. So remember, guys, you can have all of this stuff marked up on the screen exactly the same way without even having to have an indicator applied. All you need to do is learn it through the Keep It Simple series. And I've showcased it many times before that it's about understanding the principle. So the principle is always collect liquidity, drop off liquidity. The same as what's happening here with gold. We have this small zone here. After we collected, let me draw this quickly. Bear with me. Where has that gone? Oh, here we go. So pull this on here. All right, so we took these lows out where the liquid was sitting. It's a pool of liquid. We come down onto the lower time frames and you see the money in, money out happening, right? You see it happening. Now, this example right here, this was formed at midnight. It didn't tap in till 7:45 in the morning. Now, I'm not expecting this to run immediately long and stay long. I do think this is going to come back. I think this is going to come back. So with this area that we called out yesterday, it ran nicely into profit, but it did reverse and come back against us. It's the same basis. So always follow the principle. Let's go over to the daily. And without even having the indicator on that we know, the space here tells us that price action it could go bullish. Now, if we come down to the lower time frame, we took out the lows which were placed here and here. Then when we come back over to this area, you can see that we don't actually create any spaces to the upside until here. And that's the area that the money comes in. Now, if you look at the principle that happens here, people will look at that and say, well, you said enter here, or your system tells you to enter here, but price action comes down, plays around. Well, everyone knows that if you follow the concept, you use the point of liquidity being taken as the point to protect. So this would be an outlandishly sized order with a huge area for your stop loss. And ultimately, when we look at this on a higher time frame, see, only the less probable target. Well, actually, no, I suppose it was. You would have hit your first target. Your first target would have been here. Second target would have been here. But the probability is when you have a space that large, when you look at it on that scale, so we come back down to the 15-minute, and you have the scale of that, the probability is you're going to have to aim for long-term targets. You're going to have to aim for long-term targets because your stop area and the criteria you're following doesn't allow you to capitalize on enough of a trade, right? So when you have an area like that, you can say, okay, I understand the principle that I'm seeing X here. So you're seeing price sweep out lows. You're seeing your point where your stop loss can be placed. You're seeing a point where you theoretically have a position to enter the market. But if the criteria and the probability of the trade having the return to be consistent across a longer statistic isn't there, generally 3 risk reward is the minimum you want to go, then you will disregard it and understand that the principle is still in play of the higher time frame outlook that we had before, right? So there is still a minor point of discretion that has to be followed. It just needs to be applied in a logical way. If it's offering you a trade that's going to be here to here, right? And it's giving you that, which is a 1 to 7, and an improbable target, which is reasonably high, a 1 to 1, you will simply ignore that and wait for your next opportunity to come around, right? So as well as understanding the principles and being able to apply it consistently, you need to be taking a realistic mindset and looking at it and saying, right, instead of me breaking my rules and not placing my stop loss under the low that caused the liquidation to occur, let's say putting your stop loss further up and you get taken out, you're changing the statistic model there. If you keep it within the criteria and it doesn't match a long-term sustainability like model, then you don't follow it, right? Simple as that. So always keep it realistic. Keep it simple, keep it realistic. Exactly the same as Euro N. Okay? Euro N right here. You have two options. You use the last high here as your stop loss to make up for the fact that the liquid sweeping high stop loss makes this trade small. But by doing this, you are technically breaking the base rule set, meaning that the statistics of the system taught during the keep it simple concept are shifting. So by pulling your stop loss and entry to here, because if we turn this on, you'll see it. Okay, you see it right there, bias bearish. So you see the entry point there. Okay, stop loss. Oh. Stop loss above the high. See, look, entry zone created. Euro NZD and Euro USD. I don't know why this is alerting here, but okay. So from here, there is potential for it to run down. Yes, I'm not disputing that. But the move itself is delivered from the principle and understanding of here. And the initial move was there, I believe. Yeah. So again, if you want to trade it, that's up to you. If you want to refine that move, it's up to you. Now, of course, if you refine this down, don't be surprised if you get tapped out and price runs to your target anyway. So it's always about understanding the move that is most likely going to come and how you can capitalize on it. So I show you in the Keep It Simple series during the forward test, well, it's back testing, so I go to a random point in price. I show you the higher time frame narrative version of this, which is, when we go onto the hourly time frame, look at the bullish, bearish gap opens up, entry would be here, stop loss would be here. So notice how it's the same principle, but it's a different time frame, but it's giving you the same thing. We'd expect price to go down. Why is this? Well, we know that the bullish money out to money in is present. And if you don't know what I'm talking about, go to part 5 and you will see me applying this principle on an hourly time frame. So gold starting to push back up. Quite nice. Again, I'm just looking at this for a short-term move. I do think we're going to come back down here. Euro US, we swept the highs, didn't we? Yes. So again, notice how that indicator went off, but it hasn't actually confirmed yet. If this gap remains, then it's going to fall into that criteria, which is going to be well within your entry criteria for sustainable risk reward, even if you hit some of your short-term targets. 3 hours around here. Right, back in a second. What's up? What's up? We're back in business. Again, so we're still waiting. We've got like 10 minutes to wait for this. We should know if it should ping us through if it decides to create that zone or not. What are we looking at on here? I'm gonna say we're bearish. I don't know if we are though. Yes, we are. So no alerts for the highs being ran. We just have price action sitting between two major highs. So what's everyone looking at for today? Where is the playlist? The playlist, my friend, is on the Pip Surfing Society homepage. Now, I will actually just post it in here. So if you bear with me a couple seconds, I will post a link to the playlist. So let me get the playlist for you right now. Bear with me. And I need to make a playlist link for the Discord as well. Okay. So hold right on there, Bryson, and I will get it over to you. It's been a minute? Yeah, I know, man. It's been a while. I hope you're well, though. Hope all's good. A lot's changed for a lot of the older members that used to be around a lot more. I obviously stopped streaming for a little while. I mean, I just wasn't in. There we go. Wasn't in my normal headspace, so I had to change a few things. Here we go. Let's get that pinned. There we go. Right, so the pinned message up the top, that's the playlist right there. So you can use that. So again, beautiful sweep of these two highs. If we form in the next 6 minutes, which it looks like we could, space here, we will look to sell that as we have before. Now remember, we done a small partial, which was ultimately a BE. We done a long term sell-off move here, which came down to 5.5R. Ultimately, again, only a partial. And we'll see what can run from this. Now, if we take a loss on it, if price action decides it wants to just run back into and take us out, so be it. It doesn't really, unless there's a risk-reward incapability from the trade itself, then you will take it nevertheless, whether you feel a certain way about it or not. Remember, it's your feelings that are going to get you hurt ultimately. It's always the way. If you feel a certain way, you're going to be the one that pays for it when the statistics play onto the right side of what they should be. Which means you can't judge whether a trade is going to work or isn't going to work based off of if a rule set is met. You do not know what the probability is going to be of that entry working. If a rule set is met, all you know is probability of the system. You do not know the probability of that individual trade itself, because it is part of a longer string of data which collectively forms the probability of a system. So we're kind of done with SMC. It depends. It depends, because this is something that I've realized, okay? How many times this is... So first things first, the reason my system has changed so drastically is because of my son. My son was born 6 months ago, and I realized that the amount of time I spend on the charts has to change. It has to change. And what I did was I took a step back and I said to myself, right, I have X system, okay, whether it's SMC, ICT, support resistance, shapes, whatever it may be. I said I have X, and that system has point 1, 2, 3, 4, 5, 6, 7, 8, right? Has 8 points, and all of these points have to be applied to the chart, and we will use, let's say, X amount of them. So we use these for our actual trade, and then for the trade to be met, we'll have to have 2 other points that are met to give you your thumbs up to go short or long on a given asset, right? And these are based off of like a biasing. This is based off of your setup, and then you have 2 for your trade. And I said to myself, how much on an individual day am I actually using? Like, how many of these elements are actually using? Let's say it takes you 2 hours to apply this consistently to a selection of pairs. How many of these am I actually using? And I realized that ultimately it always boils down to biasing. You need an easy way to bias. You need an easy way to reference where a trade's coming from. And then you need something to tell you that a trade is valid, right? So you can break it down into literally 3 points. Your biasing, cool, with one action can be given. Your trade, so if you're selling or buying, can be based around 1 to 2 actions, which are so pretty much the same, so they come under the same umbrella as one. And then you have your trade itself, which again was confirmed down to 1 action, right? That allowed me to do something that I've never been able to do before until now. And again, it's based around, because I am a strong believer, and I always have been, that 90% of the systems that are taught, whether you're ICT and you claim to be the creator of everything but you fail every competition you get into, whether you're a new trader that's on the block that's saying that you've got a system again that is created off of X, Y, or Z, regardless of what it is, they all work around the same principle, right? Which is, where is the money? Where's the money, and where's the money going? It's either going down or it's going up, right? That's all it is. Every single system is based around the same thing. That's all it is. There is no pinpoint accuracy. There never will be, and there never has been. The hedge funds that have lasted decades making profit consistently month on month do not have a pinpoint accurate system to get in and out of the market, and they make millions, if not billions, right? So why is it that all of these big companies that don't have a pinpoint accurate system and ultimately use cost averaging can outperform all of these so-called, like bulletproof 100% accurate systems? Because they use real-world logic. So apply the real-world logic to this. If we have an inefficiency in the market and price action itself is delivering inefficient action, it means that we have a instability between the one-to-one buyer to seller basis, right? The only people that can overcome this one-to-one buyer seller basis are the banks, the people that are moving it, right? So they're the only people that can create this inefficiency, and they're the only people that can fill this inefficiency. Now, of course, on a lower time frame, you're looking at smaller transactions, smaller principles, therefore the logic is slightly different. But on a higher time frame, they're always going to do one thing. They're going to come for money, and then they're going to move the money somewhere else, because all they're doing is fulfilling an order at a certain price for X client, and then they're selling it for X client and fulfilling another order for X client. That's all they're doing, is moving money from one side to the other, fulfilling quotations that they have given their clientele. Okay? So, following that same principle, if we can track money coming in the form of spaces to the upside, so gaps, inefficiencies in the market being shown, and then you can form your money out by the same thing, looking for those gaps, all you need to do is form a bias, so work out what one you want to pick up on, and then form a principle that you can use to trade around it, right? So I've dissolved the overall understanding that I need to draw highs, lows, ups, downs, structures, because ultimately, how many times can you draw those and they don't actually give you anything? Like, all the stuff you're drawing and past price action, is it giving anything for us? No, it's not. It's not delivering anything for us except for the fact that we think we know where price is going. Whereas this system, and again, you will see it consistently by looking at the Keep It Simple series that I've posted there, this system will give you a consistent daily bias with a consistent understanding the probability of something that is going to happen. Now, it doesn't mean you'll be right, but over long term, the statistics will come out on top. And we've proved it time and time again, and we will continue to do it. And I mean, we're that confident in it, and it's such a basic system that we're actually 90% of the way done with developing a full-on indicator that will just highlight every single point that we would trade if we were just analyzing it ourselves. And we also are around 80% done with a fully automated trading bot, which is going to just do it all for us. And at that point, I can promise you now, the streams are going to come a lot less educational, because you're either going to use the indicator or you're going to pay for time to be taught how to use the system. And when I say pay for time, I don't mean monetary pay for time. You're going to have to take the time to go and actually watch the videos and learn the understanding. So there will be plenty more live streams, but it's going to be indicator based. All of the stuff's going to be given to us on a plate, and you can ultimately follow along, but it's always going to be valuable to understand the principles that are at play. So this trading system itself, I would like to call it institutional price tracking is what I'm looking at. So it is completely unique. You could say, well, ICT or whoever, has used blah, 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 but no one's taught me this system. It's based off of observations over years of working with price and understanding of the logic that's actually used with the high-end institutional organizations, which one of them I actually work with now. So again, it's based off of what I seen their algorithmic understanding of price and how they operate in the markets, as well as how the big banks operate and the way we know the market functions. So some big changes have been made, but they are superior, and I can promise you this now, they're superior to any changes that have ever been made before, for myself, for you. Across every time frame, you're going to have a consistent principle you can follow. And like I say, I've got students scalping gold using this system on the 1 minute, so it works on every time frame. I'm using it on the 15 minute. That's just the time frame I prefer to use. But it's really, really good. So I would highly recommend taking a look at it and taking some time. And of course, a little share, a little comment, a little like would go a mile. Appreciate it. We really do. Appreciate all of the guys that go and watch this. So it's good stuff that you're actually taking the time to separate yourself from the statistics, because the statistics are most people, unfortunately, just want to follow signals and get rich when we know that's not how it works. So right now we got 1 like. Can we get that? Can we get 5 likes? Can we get 5 likes on the video? Target's 10. Target's 10 likes per stream. I'm sure we can get that, right? USD JPY taking a trip. Let's see. Yeah. Well, we took that short-term long position yesterday, didn't we? From here, price action ran beautifully out of there, and then it came back down and BE pretty much. Yesterday was a bit of a wacky day, and we explained how we weren't too bothered about taking that many trades off of it. We've had that principle come forwards now. Gold as well. This area giving a beautiful push to the upside. Again, we didn't trade that. Euro N, we're also looking for that to sell off. We gave that out to the Discord community, and we explained again the principle behind this. It's a generalized move that we're looking to happen. Use the principles taught in the series to find your entry points within here. So I believe we've taken out a high right here as well, right? These are equal highs. So there's potential if that decides to open up a little bit. At the moment, nothing, but we'll see. The Euros starting to push down again. We've got 1 hour and 34 minutes before the news, US dollar news, home sales. So it's nothing too crazy. Okay, let's honestly, that's running right here. So I know we're on Tuesday already, but did everyone have a good weekend? I hope you did. Hope everyone had a nice relaxing one, spend time with family, the important things. So again, you can see a very clear principle here. The highs taken out, price action rejecting from there. Beautiful move. Really chill weekend? Great, man. I'm glad to hear. That's good. Bob's farm. Nice. I wish one of my family members had a farm. That would be amazing. That's good stuff. I went to a boxing event on Sunday. So my partner's cousin and her uncle, they're both part of a kickboxing gym called S2 Martial Arts. And there was 3 of the members of that club that had fights, and they all won, which was really good. Her cousin won by points. He won a title, his first title. He's only 17. Her uncle won by KO, like fully KO. And then well, it's actually not anyone that she's related to, but the other guy, Sol, who was in the fight, the coach of his opponent threw in the towel. So, yeah, pretty good going. Pretty good going. It was a good event, to be honest. It was a really good event. And it was funny because the guy that was going against Sol, the one who's coach through the towel, and he was messaging him, like harassing him and stuff, saying like, "Oh, you're gonna get this, you're gonna get that, you're short." I get it, it's fighting talk and things, but he was apparently going like crazy. Uncle Jones Bones. I mean, her uncle's not even that young, right? But fuck getting in the way of that dude. Fuck that. I'm not. Yeah, I'm good. So this is something that we need to adjust in the code base here. I'm pretty sure that this should be highlighted. I know it's technically an equal high, but it's still a high in all respect. So it should be marked here. And that will bring us down to price action selling from this area here. So we're still looking for the bearish bias move here. Again, gold, we're still bullish on this currently. But remember, regardless of what we actually think is going to happen, we follow a rule set. And that's what takes the system to the upper echelons when it comes to a longer term principle. When it comes to testing data that backs the settings and rules that you apply, that's when you can lean on that system and say, okay, yeah, I'm willing to risk X on this. And I was saying this yesterday. The crazy thing is, most people are willing to believe in somebody that can rent a Lamborghini or rent a car of some kind or rent an apartment, you know, and film some shorts on Instagram. They're willing to believe in them and follow signals, but they're not willing to learn a system and test it and believe in themselves. That to me is wild. That is a wild concept. That people are willing to believe in others that they don't know, but they're not willing to actually learn something and believe in themselves. That is the wildest thing for me. Because this is something I've always said. I've had people join my YouTube, my Discord, and all things like that and say, well, why should I just take your word for it that the system works? And I say, don't take my word for it. Take the rules, take the principles, go and test it yourself. Prove to me it doesn't work. Prove to me it doesn't work. That's what I say. And this is what I said as well before. I'm not here saying I've made X amount of profit in the X amount of time. But I'm here showing you a principle and a rule set being applied. So take it and apply it to your chart. What's the worst thing that can happen, right? Because I'm not telling you, don't take trades on it and risk money. Do the right thing and build a database to back your idea so you are 100% confident. So if you take 2 losses, 3 losses in a row, you're still confident that you know that system is going to pay out after you execute consistently. All of the systems and concepts that I teach, I always say, go and test it. Go and back test it. Sorry, Void, I only just saw your message there. Thoughts on NAS 100? Let's take a look, shall we? I believe that we are still bearish on this, I believe. Like the scammer yesterday? Yeah, dude. Like, come on. You know what I mean? That's some dumb shit, man. That's some dumb shit. So I've got 4-hour high being taken out there. You can see it in the form of this dotted line. So if we go down to the 15, still waiting for his payment. Bro, you're gonna pay him. You're gonna pay him. Potential for sell-off from here. There's a potential for sell-off. Let me see 1 second. Right there. Stop above the high here. I would be cautious if it doesn't tap in till New York Open. New York Open is just a bit of a whippersnapper. That's where we're looking at. So it's the same concept as what we were showing you guys from down here. So remember, this was the prediction we gave out Friday. Price action didn't play out. Didn't play out. Again, it was like 6 p.m. on a Friday. What do we expect? Didn't play out. Day before, beautiful sell-off. We called this one live in the stream. Again, if you want to go back and look at that, that was the 20th of November. We talk about it live. We explain the principles that were behind that setup. And this was the day before, where we called this to the VIPs, saying that we're going to sell from this area. We swept a high. There's a high potential we could run down to the lower targets, and we did. This one didn't run down to our lower targets, but that's fine. This one stopped us out. That's fine. This is the new potential move. It's quite tight, but that is the potential that I'd be looking at right there. And that's based off of, I think it's this high. Can't be that high. It must be this one. Must be that. Yeah, it's that. That was crazy, wasn't it? That was crazy yesterday, that dude. Just in the Discord, like, I said to him, I was like, if you're going to post in the Discord, post your analysis. We don't care about your 3 lots you're opening on gold with no stop loss. Like, that literally is the most pointless shit ever. He's like, but all of my trades are signals. Well, learn to trade then, bro. Simple as that. If you're capable of pushing sell or buy and setting a certain amount of lots, you're capable of learning a strategy to trade. So let's see here. It's what I've always said as well. Worst case scenario, you take a loss. Worst case. Worst case, you take a loss. Okay, so that's tagged. And it's another thing as well. Always remember there's always going to be some guy on the internet or even a woman that's going to, for example, let's say you showcase this to the whole of Instagram, or you showcase this to whoever, and you say, I'm taking a sell here, and it goes, bop. There's always going to be someone that's like, you could have looked into here and identified the 1 minute change in velocity across the multiple given time frames where you add XYZ to the core number of the value of the day before the trading session, and it will give you a sell. But we're not doing that, so we're going to buy it. There's always going to be that one person, right? But ultimately that is irrelevant. It really makes no difference. I think the high on EU going to be taken. Let's see. I looked at his entry price and it was like all-time high of gold. Yeah, all-time highs. Sell it. If something's making new all-time highs, the best thing you could ever do would just be sell it. Said fucking no one. Like, don't ever do that. That's just the stupidest shit. Let's see, euro. The time 134. We've hit our first target point here, which kind of makes it a bit of a risky one. Let's see then. That's 100 set up as tagged in, but no actual movements just yet. Still lingering around that entry price. So this is something that's really important as well for a lot of people, is that they are swayed and their minds are changed based off of what other people tell them or show them. Whereas you should always back your own ideas, and if you don't back your own ideas, that means you're not confident enough in your system, right? So have the confidence in your system. So daily time frame here, we were still bullish after this gap was created. We haven't actually created anything else since. So back to the 4, you see this low's been taken out. Multiple lows in here, in fact. You can watch in here for potential pushes to the upside. Remember, everything has potential, but it's all about probability and understanding that it's not always going to work out. If you have a 50% hit rate, it means half the trades you take are going to fail. And there's nothing wrong with a 50% hit rate, and this is what I've said before. The only time I get a significant amount of dislikes on any short content I post on YouTube or anywhere is if I say that you aren't always going to hit your take profit. Sometimes you're going to lose, you know. If I say something serious, like you can have a 50% hit rate and still be consistently on the right side of the gain curve. People are like, no, this guy's a fucking idiot. That's a lie. We must have 100% hit rate. Like, people fucking hate it. They hate it. In reality, though, come on. Everyone that's actually had any even sniff of consistent analysis knows that half the time your stuff isn't going to work. But when it does, it works, right? Actually agree on you, Jay? Yeah, nice. That's what we like. We like some humor. We like some uniformity, right? Good. We'll see. We'll see. I don't know right now what's going on, but we'll see. The gold's still lingering around those high areas. Remember we said that we thought this would probably come back down, take out these lows. But we will see. Right now, nothing really happening. That's 100, still sitting in this area. Remember, this is all about applying the same rule set. All about applying the same rules. Doesn't matter if you look at this and go, ooh, I don't like it. Price doesn't give a fuck about how you feel. So why are you giving the market a reaction based on how you feel? This is a non-emotional environment. This is purely statistically driven, money driven, data driven, numerically driven. So how somebody feels about a specific action has no relevance and no purpose in this kind of environment. Go UGU here. GJ. GJ is sitting in between those highs still. Gold pushing up now. Well, I say pushing up. It's a minor push to the upside. Remember, guys, if you're not in the Discord, the link for the Discord is down below. Again, look at this. We went long, didn't get to where we wanted it to go. We went long, it didn't get to where we wanted to go. We went long, didn't get to where we wanted to go. Now, again, it doesn't mean that we're taking a loss and a loss and a loss, but we don't change our direction and start selling it just because here it didn't work out, here it didn't work out, here it didn't work out. You sell it, you sell it. You buy it again because that's what your rule set tells you, right? If your rule set changes from those points, then you can shift. You can be on the right side of your rule set before you're ever going to be on the right side of the market. Simple. It's really that simple. So, extending that out. So who's got crypto investments then? I know there's a few of you. I know there's a few of you that do. So that's 100 pushing right up. This takes out the high. You take a -1 on that. Take a -1 on it. So be it. Happens. Don't revolve your trading system around not taking a loss because you're going to consistently take losses because of that. You take a loss right here, so be it. What did we do? Well, we stayed true to the model that we know works. We stayed true and consistent to the rule set, and we stayed true to ourselves. What we're not going to do is have any days where we sit down at the end of the day, and I know you've all had them, we sit down at the end of the day and you have your dinner, or you have a cold beer, or you have a refreshing drink, or you sit down with your partner, and in the back of your mind you think to yourself, if only I'd have just done this, or if only I'd have just done that, I wouldn't have X, or I wouldn't have Y. Yeah? When you follow a rule set, you don't even need to think about that stuff because there is no what if. The what if is the only option for you is you didn't follow your rule set, which you shouldn't be in that trade, right? So there is no what ifs. It eliminates all of that. It becomes well, I've done what I needed to do. Tomorrow I'll continue to do it. And that's why a trading bot is always going to be superior to a human. And if you can dial it in to trade something in the same way that you would, it's always going to be superior because it doesn't switch off at the end of the day and go, oh no, I took 5 losses today. I better change my way of trading. No, it just says back again tomorrow. does the same thing because it knows on a long-term statistic it does what it's meant to do consistently, right? So that's almost at the high. It's not there yet, but we'll see. Again, if it takes it, you take a loss. There's a reason why you set a stop loss with a certain amount of risk, because you put that on the table knowing that it is there to be paid to the market. It's the fee. It's the trading fee. Everyone has to pay the fee. It's the fee. You have to pay your fee. So what do you guys think on having potentially some of the mobile orientation streams, you know, when it's like a phone sites, you know, like the live streams you see when you're scrolling on your phone? What's your opinion on those? Because I'm thinking about having one of each per week. Well, not one of each, but let's say one normal live stream, one mobile, one normal, one mobile, one normal. If there was a way that I could have two streams running, you know, that worked in conjunction with each other, I would do that, but I don't think it's plausible. I don't think I can do that, unfortunately. Again, price starting to turn around a little bit here. If it decides it wants to turn around partially, then take us out. So be it. If it wants to run down into profit, so be it. Let it do what it's gonna do, because it's got nothing to do with you. Just let it do it, right? Humans find it so hard to let go. Just let go. Just let it do its thing. There's nothing you can do to stop the direction of a trade changing. There's nothing you can do to make that trade go in the direction you want. The only thing you can do is consistently enter and exit at the points that you know you should be. Simple as that. So what do you guys think? Mobile orientation streams. Is it a yay or is it a nay? Too old for TikTok Live lookalike. Yeah, that's fair enough. So we have some amazing feedback on the Keep It Simple series. So amazing feedback. Which is great, obviously. Yeah, of course. So this is the thing as well, that the actual growth like side of it, like the how would I say, like the growth for a live stream like this, right? For example, I'll give you guys an understanding of the metric. So right now, we've been live for how long? An hour and 17 minutes. We have accumulated 42 views with an average of 9 minutes view time, which is pretty impressive. So thanks to you guys. That's pretty impressive. We've got 6 likes and our maximum concurrent viewers is 8. Apply that to a short perspective and probability is we will have a much lower average view duration, but a much higher view count and most likely a much higher like count. Now this also adds to one of the other elements, which is it draws people in to the other content in the page, right? So the reason I say this is because if we go to the metrics that we have for our current, like where we sit right now, I'll go to my analytics quickly. Okay, so we go to the analytics and we have, when we go to our content, we go to our shorts, it works out that almost 70% of our new viewer base comes from viewers that only saw our shorts, which to me is kind of insane because that means that our long form videos and our live streams, if they disappeared, we would still have a pretty consistent viewer base coming in, which tells you that they don't have as big an impact as we thought. So it's interesting. It's interesting. Of course, look, I appreciate that, man. Really appreciate that. And the same for everyone else. I appreciate all of you. We'll see. We'll see what happens. I don't even know how you stream in that orientation, to be honest. So right now, it's not happening. I was just wondering. To be honest, once I get to 1,000 TikTok followers, I'll probably just stream these streams, but on TikTok. And for anyone that's wondering how many streams we're at already, not streams, sorry, how many followers we're at already on TikTok, we're really close to our 1,000 follower goals. We have 25 followers. We have 25 followers, so we have such a long way to go on TikTok. I did think about buying some followers just to get that live capability, and then just go live from there. But I'm not one to skip around, you know, I like actually doing stuff. So we'll see. Now still sitting here. I would pretty much write this off, to be honest. It came down, now it's pushed back up again, so I would write that off, in my opinion. I'm leaving it in. If it tags us out, it tags us out. Simple as that. Remember, we're always doing the same thing. We're following probability basis in terms of actions within the market. We're not following FOMO impulsive actions. We're following calculated, pre-data backed actions within the market that we can consistently rely on without having to worry about, oh, is it going to work or isn't it going to work? Because whether it works or not is irrelevant. Literally irrelevant. Same setup here. Now remember, if you're trading a collective of pairs, you can incur obviously a larger drawdown in drawdown periods. That is just the way it works. But again, backed by data, if you have confidence in your system, you should not be worried about incurring a drawdown. So time is 5 to 2. Okay, so we're probably going to look to cancel this order out, to be honest. Price action looks like it may want to start running down again. That's fine, but we don't want to hit too many short-term targets because then that alleviates our short-term probabilities. If we hit the 1 to 3 principle, then it means we have to extend past that to re-hit short-term goals. So it's looking like we'll probably cancel this out if it doesn't tap in within the next sort of 30 minutes, 45 minutes. Again, Naz is just playing around still. We're not too worried about what happens with that. Like I say, as far as I'm concerned, that's written off. It's done. If it plays out now, awesome. If it doesn't, again, we've accepted it as part of the statistical approach that we take. So let's see. So remember, coming soon, there will be lots of good things coming towards the automation side of what we show you here at Pip Surfing Society. We're going to be doing live forward testing, live back testing. We're going to be doing all of the good stuff to show you systems that we explain and consistently go over work in a real world scenario over a long-term period, over all sorts of pricing conditions, and they're also going to offer you a way to trade with very minimal time applied to the actual chart itself. So all coming very soon. 2025 is going to be a big year. Our one-to-one mentorship is open now until the end of the year. So if you are looking to get a seat for that, I would recommend it because we are going to be closing it at the end of the year and we won't be reopening it until we have cleared some spaces in the mentorship. So again, there's going to be a lot of demand coming in the new year. We have lots of new things. Our website is almost done. The automatic trading bot is almost done. The indicator that literally highlights everything for you is almost done. A lot of momentum coming. So make sure you're all part of the journey coming into this next year. Okay, guys, so I think we're going to call it there. It is 2 p.m. So we're going to call it right there. We're going to go work on some other bits that we're doing at the moment, and then we will be back tomorrow with another live stream. Probably around the same time, 11:30, 12:30, around that time. But remember, it's all about sticking to your rule set, following the probability basis that you know works, and sticking to your risk. Until then, guys, I hope you have an amazing rest of your day. Trade safe, follow your rule set, and I will see you all in tomorrow's live stream. Peace and love, guys. I'll see you then.